Hey everyone, it's Ryan with SacramentoAppraisalBlog.com, and let's talk about the market in Sacramento. Okay, I've been describing it as a flat market that's really competitive. It almost sounds like an oxymoron, but I want to unpack what that means by looking at prices and sales volume and momentum. So if you can give me 5 or 10 minutes, let's talk shop and walk through some things. And I hope this is useful for sellers and buyers and agents out there. Let's look at the latest trends. So here's the median price in the Sacramento region. And you can see in 2019 so far, we've seen what looks like a normal seasonal uptick. Okay, where prices have definitely gone up from the fall. And this is not unexpected because it happens every year in a market that we would categorize as normal. But one thing to note is that prices have not yet reached where they were at the height of summer or the height of last spring. And so sometimes statistically, right away in about February or March, I mean, prices are back or they're even higher than they were during the summer. That's not happening this year. I don't think that's a surprise since the market has been more modest in a lot of ways. But I mean, we really could get there in April or May. And so we'll have to kind of see what spring stats do, how they unfold. Okay. So there's a bit of a question mark still on the market. Where's the market going exactly? But right now, I think in a lot of ways, we're experiencing a very normal seasonal dynamic where most metrics just show normalcy. Okay, so prices are definitely up from the fall. When you look February compared to March in the Sacramento region, all price metrics are up about 2 to 3.5%. And so prices are definitely different from where they were at the end of 2018, where we had a very dull market. Okay, so in that regard, we would say yes, the market is booming, prices are increasing, but let's back up because there's more to the story. Compared to last year at the same time, prices are pretty flat. And so you can see that most metrics in the Sacramento region are really up 1.5 to 3% at the most. Over 12 months, that's very modest appreciation. And so in that regard, I would say that the market is pretty flat. Okay, now when we look at Sacramento County, which has the most data out of any county in our surrounding region, look at the median price. It's exactly the same as it was last year at the same time. And so can you see why on one hand I would say yes, the market is really competitive. Buyers have to bring strong offers. It is not a weak market out there. But in terms of price appreciation, the market does feel a little flat in a lot of areas and price ranges. In other words, it doesn't feel like that super aggressive market from the past. Okay, here's a great image. I just made it today. I hope you like it. It's a comparison of cash sales in 2012 versus 2019. And as you can see, in Sacramento County, Placer, El Dorado, or the region, I mean, cash is definitely down from where it was in 2012. And so sometimes sellers are looking at the market going, oh, it is so aggressive out there. And I would actually concur and say, yes, it is. But at the same time, it's not that aggressive cash market from yesteryear. It's a much more subdued market, which I think I'll unpack in a little bit here. Okay, so lower rates have been like a steroid in the market, though. Okay, they've been injected into the market, and it's really changed the dynamic, how the market feels, how competitive it is right now. And it just shows us how tied we are to low interest rates in our market. I think in an unhealthy sense, where when rates change, it really changes the feel of things. Okay, and so it really has been like a steroid. And so my only thing is what happens when the steroid you know, um, dries up or wears off later in the year if rates do go up. And so we have a market in some senses, it feels contingent on the direction of low rates. Here's a huge way rates have made a difference in the market though with sales volume. Sales volume was very strong in March. In fact, it was only down 5% from last year at the same time. And that's actually welcome news. It might seem funny to say that, but sales volume has been down about 10, 15, 20% plus, year over year, depending on the month, for about 10 months in a row. Okay, and so it's huge news to see that we had a pretty strong month. Okay, now when looking at the past year of sales in Sacramento County, volume's down by about 6%. That doesn't sound like a lot, and statistically it's not. It's possible to have a market that just has lower volume. We saw that literally in 2014 and 15. But at the same time, this is something we're watching because what volume does in the future, I think, will tell us sort of what the overall market is doing. And there have been 1,000 less sales in Sacramento County this year compared to last year. And that's no small matter, especially for real estate friends who are selling or appraising or earning their living off the market. Okay, here's a picture of volume in the region. Very similar story. Very strong March, only down by about 6%. The past 12 months is down. We've seen about 2,000 less sales in the region over these past 12 months. All right, so I love this analogy. Got it from Barry Habib. Said, the market used to be driving 80 miles per hour, but now it's driving 30. And this is so true, where we've seen forward progress still, but the market is no longer that aggressive market that it used to be in 2012 and 2013. In fact, it feels very flat in a lot of areas when I'm pulling comps. Not flat with how competitive it is, but not increasing like it used to. And here's a really good way to look at that. I've been sharing this chart. I hope you like it. I certainly love seeing the market this way. When we look at March since 2013, here's the median price in the region. And you can kind of see that over time, the prices have really changed. They've gone down. The rate of change has simply minimized. It's been a lot less than it used to be. Okay, only up 2.5% from last year. Or when we look at the past 90 days, January to March, for each respective year, you can see a very similar dynamic where the rate of change has really gone down. Okay, now it's still going forward, but it's not what it used to be. And so can you see why I'm calling the market more flat? Okay, and when we look at the annual median price in all of these years, you can see when looking at 12 months of sales through March each year that very similar dynamic. Okay, so as I've been saying, the market has felt uncertain, but it's flirting with normalcy. And I think over the last couple months, some of that uncertain vibe we felt in the past 2 quarters of 2018, it's dissipated and it's kind of gone away because the market has felt more positive and we're seeing, increases. And here's an important thing to note. In red, you see pendings right now are flirting with normalcy compared to where they were last year. Okay, and like I always say, we see the market in the pendings, and if we're seeing strong pendings, those are going to be closed sales over the next couple months. And so I know I wouldn't be shocked, and you probably won't be shocked if we have stronger sales in both April and May because of how strong pendings are. Okay, now if interest rates change, that dynamic could certainly change. So anyway, I hope that was helpful. There's lots more we could talk about. I'll link to the big monthly market update I just put out to talk through a lot more stuff, but you can subscribe to my blog if you wish. I hope that was helpful. Give it a thumbs up if you liked it. Thanks so much.